Hello and welcome to Business Incorporated. I'm Chimeze Obi Iwago. Coming up on the show, IMF raises its economic outlook for the Middle East and North African region by 1.2%. AFDB provides $14 million to boost agriculture in South Sudan. And Kenya to receive 4.1 million doses of the COVAX vaccine in February. We tee off the show with market numbers, and in Africa, the positive trend in the South African market was sustained today at intraday as the JSE index rose 0.28%. On the flip side, Nigeria's main index continued its marginal drop lower by 0.04%, while the EGX 30 in Egypt declined 0.11%. Kenya closed positive on Wednesday. It was a similar picture in the Middle East, where major markets were mostly negative at intraday. Dubai's index shaved off 1.54%, while the Abu Dhabi index was lower by 0.19%. The Qatari index followed the trend, declining 0.39%. Only the market in Saudi Arabia was positive by 0.57%. And in Europe, stocks inched higher this morning as investors remained focused on earnings reports and developments on the coronavirus pandemic. Let's cross over now to Frankfurt Stock Exchange, where Conrad is standing by to talk to us. Hello, Conrad. Good afternoon. How are you doing today?
Good afternoon, Jimmy. I'm quite good. I already was very busy today going out, reporting about Deutsche Bank, and now I'm back at the stock exchange talking to you. What could be nicer?
Yeah, talking about Deutsche Bank is called Super Mario for a reason. Mario Draghi, that's ran the European Central Bank, and with a famous sentence, he saved the euro as a common currency. Now, Draghi was asked by the president of Italy to try to form a new government. Does he have, what does he have, to save Italy now?
Well, Jimmy, I heard a quote here at on the trading floor today, and it goes, Mario Draghi is the best person for the worst job, that's governing Italy. He certainly has perfect credentials for the job, and not only in Europe, but also in Italy itself. And it's the Italians that have to be convinced that if the country really wants to stay in the club of the euro, it has to do reforms. For example, reforms of the pension system, reforms of the way how Italians are encouraged to join the workforce, stuff like this. Of course, all this would need much more than just one short sentence, whatever it takes, by Mario Draghi. But Draghi really has the credentials, and he probably has, the political weight to convince Italians that it's necessary to do these reforms. The spread between Italian government bonds and German government bonds, which indicates the risk difference between the two, this spread has narrowed, it has come down. So obviously many people on the markets are confident that Mario Draghi is the right person for the job.
All right, let's talk about Deutsche Bank proper now. After 5 years of net losses, the bank ended the coronavirus year with a positive result. So how surprising is this, and what does it mean for Deutsche's competitors for the rest of Germany's banking sector?
It's a very positive surprise. On average, analysts had hoped or expressed hope that Deutsche Bank might manage to post a net profit, but the net profit actually that Deutsche Bank presented, 113 million euros, that's even higher than the predictions. And particularly strong is the investment banking unit at Deutsche Bank, trading with corporate bonds, government bonds, currencies, derivatives. And with the ongoing volatility on the markets, the high trading volumes, it's likely that Deutsche Bank will continue to have quite a prosperous investment banking business. Still, the company announced that it will continue to cut costs rigorously. That's still not as strict at what Commerzbank has announced, Germany's second largest private bank. It came out with a loss for the year 2020, and also Commerzbank is announcing heavy cost cutting. It's planning to close 350 of its 800 branches here in Germany. 10,000 jobs. That's about 20% of Commerzbank's workforce will have to go. The reason behind this is Commerzbank really has to do something. Before the bank was saved by the German taxpayers in the last financial crisis of 2008, 2009, Commerzbank's shares were at 220 euros. Now they're trading below 6 euros.
And still on earnings there, a number of tech companies reported earnings, with eBay, PayPal reflecting heavily increased online shopping activity during the coronavirus lockdowns. But Spotify's outlook has weakened due to pandemic uncertainty. What's going on?
Well, yes, Spotify is really a bit of a spoil sport in the chain of tech companies that came out with very upbeat earnings and upbeat forecasts. Spotify not so much. Of course, Spotify too has profited quite significantly from the corona pandemic, from the lockdowns. Many people stayed at home and just listened to music. They listened to podcasts. Spotify heavily invested in the production and the distribution of podcasts. But now the question, of course, is, after the pandemic, will people still be inclined to listen to hundreds of hours of podcasts when at the same time then they can go out and meet real human beings again? This question is very difficult to answer. And this is why Spotify says that due to the unknown duration of the pandemic, there is a substantial uncertainty for the outlook.
All right, Conrad, we just have one more day to say thank God it's Friday. In the meantime, continue to keep safe.
You too, Jimmy.
Thank you. And UK investors are about now hearing from the Bank of England as it sets interest rates and pushes its latest economic analysis and inflation projections. Let's get a sense of what the Governor, Andrew Bailey, perhaps might be saying now from Juliana. Hello, Juliana. Good afternoon. Well, Andrew Bailey's briefing started a couple of minutes ago. What is he saying? What direction is the monetary policy environment taking?
Good afternoon, Chimmy. Yes, the Bank of England governor is speaking, but the announcement's been made and the economists were right. Interest rates have been kept on hold at 0.1%, still historically low here in the UK, and the quantitative easing programme stands at £895 billion, although a lot of people did expect that this would remain the same. In some of the minutes I managed to kind of scribble down as I was rushing into the studio, there was one comment he made, which is that Britain is facing an unusually uncertain outlook for the economy. That sent the FTSE right into the red. There are so many major concerns. I think before Andrew Bailey spoke, a lot of observers had said that even though we are heading for a double dip recession here in the UK, the third national lockdown PMI figures that we had looked at showed that the decline in sentiment and consumer purchases wasn't as bad as it was during the spring outlook. And of course, yesterday we hit that 10 million figure in the amount of people that had been vaccinated. But it does appear like the 9 strong Monetary Policy Committee members are still particularly worried. And this could perhaps have lots to do with the new variants. We've spoken about South African variant, Brazilian variant. There are so many different issues that are pertaining to COVID-19 in this country and the variants, and whether or not these vaccines will get Britain out of a lockdown. If we stay in this lockdown, past Q1 of 2021, then there will be major concerns. So he is still talking. So hopefully in the morning we can go through some of these major talking points he mentioned.
Sure. And then hotel operators, Whitbread and Intercontinental Hotels are among early risers, along with jet engine maker Rolls-Royce. I guess the market is basically following perhaps what Andrew Bailey is saying now. And what we had earlier is not fitting in at the moment in intraday.
Absolutely right, Chimaze. The FTSE is definitely in the red in London as we speak, and the sterling is on the rise, and that's because, of course, of that 0.1%. We have had some trading updates from banks. Their profitability at the moment pretty low, waning. They've given out billions worth of pounds of debt, which they don't think they're going to claw back. So sterling was pretty happy at that interest rate hold. There have also been some other pretty dire economic figures. We've had some figures from the Society of Motor Manufacturing, which shows that January was the worst month on record for car sales. In fact, the worst in 50 years. Car sales in January in the UK were just above 90,000. That's 35% less than it was this time last year. Not a great time for car dealers here in the UK, particularly as showrooms are closed at the moment. So it's pretty difficult for anybody to buy a car if you can't test it before you drive it. We've also had the last of the PMI, the Purchase Management Index figures, and this time it is for construction, shown that there's been a massive fall from 54.6 in December to 49.2 in January. Now, the industry and the sector are saying again, this has got lots to do with the pandemic. We're in another lockdown. Sentiment is a little bit anxious at the moment. People are not sure whether or not they want to place those big orders if they're not going to have a massive staff count. So these are negative figures that, of course, have been reflected in the FTSE and intraday.
Okay, it's still our earnings season, and Royal Dutch Shell plunged to a loss of almost $20 billion last year after the impact of the coronavirus pandemic on the global oil market stripped it around $22 billion from the value of its oil and gas assets. How are investors reacted to it?
Well, the last time I checked, I think Royal Dutch Shell were trading about 1.56% lower, which isn't bad considering a £16.2 billion deficit is a lot of money. I think economists had predicted it could be much worse. We've already had results from BP, we've had results from Exxon, and they were all pretty similar, between that $18 billion and $20 billion. I think the issue is obviously for the oil and gas companies is that, you know, they're skating on thin ice. I think a lot of people were celebrating the end of 2020, not realizing that this pandemic would be with us for much longer. And of course, oil demand, gas demand is slumping. You couple that with the fact that, you know, the climate emergency is a huge deal. There is a lot of problem. But I think what investors are now waiting for is to hear from Ben van Beurden next week. He's going to be doing a big conference. Bernard Ludy, the chief executive of BP, he's already been waving the flag of trying to transition a dirty oil business into a clean, green emissions machine. I think that's what Royal Dutch Shell are desperately trying to do. They've already said, I believe they said it last quarter, that they were going to be axing 9,000 jobs worldwide. But, you know, the demand for oil is still there, but the peak is gone. So it just depends on how some of the big major oil giants will be able to transition in the future. And it'll be interesting to see what his announcement will be next week, Chime.
And that's what we'll continue to track. Thank you very much, Juliana. Enjoy the rest of the day.
Thank you.
And shares in major Asia-Pacific markets slipped today, with South Korea leading the losses. The Kospi in South Korea declined 1.35%. Mainland Chinese stocks also closed lower, with the Shanghai Composite down 0.44%. The Shenzhen component slipped 0.83%. The Hong Kong's Hang Seng Index dipped about 0.6%. In Japan, the Nikkei 225 shared 1.06%, while the Topix Index slipped 0.32%. Stocks in Australia slipped too, and the S&P ASX 200 fell 0.87%. And in the U.S., futures contracts tied to the major stock indices were mixed during early morning trading, as Wall Street struggled to continue the S&P 500's winning streak. Dow futures dipped 33 points. S&P 500 futures trade below the flat line, while Nasdaq 100 futures traded in mildly positive territory. The moves in extended trading came after a relative calm day on Wall Street that saw the S&P 500 edge out a rise of 0.1% and a mark of third straight day of gains. The index is up 3.12% this week. The Dow Jones Industrial Average added 36 points, while the Nasdaq Composite dipped less than 0.1% amid a drop in Amazon shares during the regular session. We'll take a break, and when we come back, domestic commodities market update is next. We are talking tomatoes on our domestic commodities market update today. Nigeria is the second largest producer of tomatoes in Africa and one of the largest producers in the world, producing approximately 3.82 million metric tons annually, accounting for about 2.11% of the total global production. However, Nigeria exports only about 450 metric tons of tomatoes every year. Why is that happening? Let's talk to Sheyi Omidiora, one of the research analysts with Financial Derivatives Company. Hello, Sheyi. Good afternoon.
Good afternoon.
Although Nigeria is the second largest producer of tomatoes in Africa, exports are really low. What are the challenges of tomato farming in the country, and in what ways can Nigeria overcome these problems?
What we have seen with tomatoes is that it's mostly grown in the north and north central basin of the country, where small farmers are typically responsible for about 90% of tomato production. Now, these small farmers actually produce a lot independently on their own, but then there is some aggregation problem in terms of bringing their produce to the markets and to form a super supply group, and that's a major problem. Now, for these farmlands, some of these farmlands are also situated in places that are inaccessible. And for some of these smallholder farms, it's probably cheaper for them to actually let their tomatoes go to waste instead of bringing it to the market. This is probably a fallout from the fact that there are no super aggregators who can efficiently pull all these products together and efficiently bring it to the market. In addition to that, another thing we should look at is the fact that tomatoes are highly perishable products. They are difficult to store and also difficult to transport. Now, for the tomatoes that eventually manage to make it out of these secluded locations, some of these secluded farmlands, and brought to the market, so a lot of them get damaged in transit. And for them, for those that don't get damaged in transit, they eventually might get infected by this common tomato infection. Now, again, it's probably a fallout from the fact that there are no super aggregators who can actually provide or procure infrastructure, transport and storage infrastructure. And for these smallholder farms, it might be impossible or does not even economically make sense for them to procure this infrastructure themselves. So that's some of the factors at play here.
Now, the price of a basket of tomato has been stable at about 7,000 naira in the last 2 months. In the past year, prices were incredibly volatile, attaining a low of 6,000 naira and reaching a high of 35,000 naira in the 12-month period. So what factors were responsible for this, and what is the outlook for tomato prices in the short term?
Yeah. Now, for tomatoes and largely locally produced farm produce in Nigeria, it's always a factor of, it's always a question of two things. One, the first one being security in the north, and the second being the perennial flooding that occurs in the north. Now, we saw in late October last year where prices skyrocketed to as high as 35,000 naira. And this was during the floods when loads of people were displaced in places like Kano, in Jigawa, in Sokoto. And of course, with that, it reduced the supply drastically, which actually pushed up prices sporadically. Now, as regards the outlook for tomato prices, we know that tomatoes are a staple in Nigeria's culinary repertoire. We also know that while there are close substitutes, people still tend to go towards tomatoes. People tend to favor tomatoes for their cooking. Now, we also know that while people will pick tomatoes over other products, they also tend to not want to move away from tomatoes again. And this, of course, will tend to push up the price of tomatoes. We also know that Easter is fast approaching in about 8 weeks. And with that as well, there will tend to be an increase in demand for tomatoes. And this, of course, will also push up tomato prices in the short run.
A quick one before I let you go, Sheyi. We've seen, of course, that from what you have said, a lot of tomato is being wasted because of poor storage. So how much of backward integration, from tomato paste manufacturers are we likely to see in the near future?
I believe this is a function of how many firms are large enough and have the financial and technical wherewithal to pull this off. One of the primary concerns or one of the primary problems with actually making tomato paste in Nigeria is the quality of our tomatoes. Now, our tomatoes actually contain a large volume of water of about 40%. This does not actually produce the quality of paste and consistency of paste that tomato paste makers or producers, manufacturers would like to see. Now, we recently saw Dangote set up a hybrid, a greenhouse facility where hybrid tomato seedlings were produced annually. About 350 million tons of tomato seedlings are produced annually. And these seedlings are capable of producing between 40 million and 70 million tons per hectare annually. This is way above the current average we produce, which is at about 5.7 million hectares per year. Now, again, as I said, it's not a lot of firms have the financial and technical wherewithal to pull this off. So while we might actually see some backward integration, I don't think it's going to be something that will be widespread in the country.
All right. Thank you very much, Sheyi. Enjoy the rest of the day. Thanks for your time. The International Monetary Fund has raised its economic outlook for the Middle East and North Africa region's growth in 2020 by 1.2% to an overall contraction of 3.8%, showing that despite some progress since the coronavirus pandemic began, it has still been a brutal year by any account. According to the IMF, recovery will be varied and based largely on countries' investments and strategies for vaccine distribution. However, the IMF says there has been one bright spot for the Gulf states in particular, and that's the lifting of the political and economic blockade of Qatar by other GCC countries. And the African Development Bank has provided a grant of $14 million to South Sudan to boost agriculture and reduce the nation's dependence on oil. According to the AFDB, the fund is aimed at enhancing agricultural productivity and boosting marketing and trade of agricultural products in the North African country. The grant will also support the agricultural markets, value addition, and trade development projects by the UN Food Agricultural Organization. And Kenya is among countries set to receive COVAX COVID-19 vaccines before the end of February. In a report released by COVAX, Kenya will receive 4.176 million doses as Uganda receives 3.552 million doses of the vaccine in the region, while Rwanda will receive 996,000 doses. COVAX says it currently anticipates 1.2 million doses of the Pfizer-BioNTech vaccine, which will be available to the COVAX facility in the first quarter of 2021, subject to the completion of additional agreements. And that's a wrap on the program. Thank you for watching. I'm Chimizi Obi.